Thanks for joining us for the Purdue University-CME Group Ag Economy Barometer's April 2023 survey results. I'm Jim Minter, Director of the Purdue Center for Commercial Agriculture, and I'm going to share with you the highlights of this month's survey. The Ag Economy Barometer index was up 6 points compared to last month, and that was also up 2 points compared to a year earlier, but that index is still 55 points below where it was 2 years ago. The current condition index was up 3 points compared to last month, and that leaves it 7% higher than in April of 2022. The future expectations index was up 7 points compared to last month, and that puts it 2% below where it was in April of 2022. The Farm Financial Performance Index was up 7 points compared to last month at a reading of 93, but that leaves it 2 points lower than a year ago and well below where it was 2 years ago. The Farm Capital Investment Index was up 1 point compared to last month and up 7 points versus a year ago. However, that index remains 32 points below 2 years ago. We continue to ask producers who think now is a bad time to make large investments in their farming operation why they feel that way. High prices for machinery and new construction and rising interest rates are the two most important reasons for saying now is a bad time for making large investments in their farming operation. We've also been asking producers recently what they expect to see happen with respect to the U.S. prime interest rate. 66% of producers in this month's survey expect higher interest rates a year from now, but that's down from 75% who felt that way back in February. The short-term farmland value index was up 10 points compared to last month, but that was still 21 points below a year ago. And the long-term farmland index was unchanged compared to March and was up 1 point compared to 1 year ago. If you look at the responses to the 12-month ahead question with respect to farmland values, the shift was mostly about the percentage of producers expecting values to decline. That dropped from 20% last month to 14% this month. At the same time, the percentage expecting values to increase rose from 33% to 37%. In this month's survey, we asked producers what they expect to see happen with respect to the passage of a new farm bill in 2023. Just 40% of producers think it is at least somewhat likely that a new farm bill will be passed by Congress in 2023, and at the same time, 13% of producers think passage is very unlikely. Thinking about a new farm bill, we've asked producers what is the most important title of the farm bill to them. Producers chose crop insurance and commodity programs as the two most important titles in a new farm bill for their farming operation. And finally, in a follow-up to questions we've been asking over the last couple of years about lease rates for farmland for solar energy production, it appears that those lease rates are starting to rise. 25% of those engaged in a lease discussion with a company in the last 6 months say they were offered a rate of $1,250 or more per acre. That wraps up the highlights from this month's survey. The full report is available on the Purdue CME Group Ag Economy Barometer website, which is purdue.edu/agbarometer. And you can also get a more detailed discussion on our podcast, Purdue Commercial AgCast, which is available on major podcast providers and at purdue.edu/commercialag. On behalf of the Center for Commercial Agriculture, I'm Jim Mintert. Thanks for joining us.